this is Sharan from Finance with Sharan. But today we are doing Housing Finance with Pankaj. Pankaj who? Mr. Pankaj Gadgil, the MD and CEO of Aditya Birla Housing Finance Limited and the Group Head of Digital Payment and Analytics of Aditya Birla Capital. He is a visionary in the world of finance and I'm very thrilled to be talking to him today. Mr. Pankaj, thank you so much for agreeing to talk to me.
Thanks, Sharan. I'm really thrilled to be here.
So, Mr. Pankaj, you had a very illustrious career in finance, almost 19 plus years in ICICI Bank, and now you're the MD and CEO of Aditya Birla Housing Finance. You did your MBA when I was like 1 year old. So, did you already know that you want to build a career in finance? So can you just walk us through of how you became who you are today?
Actually, I did my engineering before my MBA.
Same as me, I did mechanical engineering.
And I worked in the automobile sector. And I moved to finance in year 1999, and 2003 is where I joined ICICI Bank.
Okay.
That is where the career of financing really started, for me. And I was lucky to handle right from small tickets, which is two-wheeler loans, to car loans, commercial vehicle loans. And then I got introduced to this brilliant world of digital. That was the year 2014, to be precise. And that is where the journey of digital transformation for ICICI Bank started in the MSME sector. And very happy to share that we could create several platforms, and I'll name a few. We actually did the InstaBiz.
I use that for my business.
Is it? Okay, so InstaBiz is an application, of course, which is used by more than 10 lakh customers today. And it served all the financial requirements and the business requirements of the customer. We did connected banking, which was the open banking that all of us really know. We also had a great solution that we built, which was for merchants for digitally collecting money, which was Easy Pay. Coming to Aditya Birla Housing Finance, which you started off with, and also the role that I play as head for group for the digital analytics and payments business, I'll talk a bit about that. So at the housing finance business, while mostly we think that housing is very physical, in nature, we've ensured that we've also embarked on a transformation journey, also on digital on housing finance, and made the journey a happy home loan journey. And I'll talk a bit about that, subsequently. But we've tried to ensure that the anxiety which the customers have today, which is a lot of anxiety in the entire process, that has been taken off.
Because you were for 19 years, you were with one company, and then straight away you're the MD and CEO here. Can you talk a little bit about how was the first 100 days of you working here? What did you start doing over here as soon as you started working? So
first 100 days, I think, was very important to understand the people, understand the culture, at the group, because you need to understand the ecosystem which you are, operating in. So understanding people, understanding the culture, understanding the entire market map, and talking about what is the market opportunity, I think was very critical. We created a strategy for ourselves considering the insights, and it was very important for us to also understand what the customer really wanted. So it all started with customer insights. It also started with talking to employees who meet customers very often.
So you were doing all of this personally?
We did that with the team, and I also did that personally by doing town halls, by meeting customers, by ensuring that we met people from competition. Very interestingly, we also spoke to employees who joined us from competition.
Okay.
And they gave us a lot of insight about what is happening with competition, and most importantly, what is the customer looking at when he's looking at a housing finance company.
Yeah.
And what does he look at before deciding which housing finance company to look forward to when he's looking for the home loan. I think those were the initial days, and we carved out important principles for us as an organization. But it all starts with customer centricity. That was a very important first principle that we started talking.
How big is the team?
Now we have more than 3,000 employees.
3,000 employees
at Aditya Birla Housing
Finance. You're looking at. How do you drive the vision of 3,000 employees?
I think it's there are two simple things. I think communicate, and also make sure that you execute what you communicate. So I think that's the cycle that you have to operate with. Build the A team. Make sure that the A team kind of resonates with the principles, with the philosophies. They get aligned, and then they of course execute the plan that you have kind of set. And it is all about execute once you decide the plan. That is what we've kind of decided. So bringing in these 8 principles, executing those principles, and most importantly bringing the game changer, which was often in the entire business you find that your teams don't have enough face time with customers. That is because they come to your branch, they're handling documents, many things are happening offline. So we decided that rallying upon and looking at the experience that I had of creating digital platforms, I thought there's an opportunity also in the housing segment to create a platform which handles the customer's journey right from prospecting till disbursement, everything end to end on one single platform. That's where we created Finverse.
Is that the primary reason why you're brought here? Because you had such a vast experience in digital transformation. You've been brought here to kind of bring that
I think
sort
that was
of
one of
ethos.
the reasons. I successfully built many businesses at ICICI Bank itself.
Yeah.
So that was one of the most important reasons. And of course, my experience with NPCI earlier, as I was a board member, also on NPCI.
The committee which made UPI.
That's right. And also on NPCI International. So there was a vast exposure that I had in payments.
One of the biggest concerns that a person looking for a housing loan looks at is the interest rate, of course, right? The higher the interest rate, the more EMIs they have to pay. And the second concern is the fluctuation of interest rates, right? Interest rates, as we know, is not something which remains fixed, especially in housing loan. So how does a prospective home buyer look at the fluctuation of interest rates and decide how to get a housing loan?
I think, like you rightly said, it's a 15-year product, not 15-year-old, but 15 years, product. So you, as a lending institution, can't also predict how the rates are going to be.
Correct.
And therefore, the floating rates came into existence.
Yeah.
While the short-term loans in India, you will see they're all, fixed interest rate.
Like for example, during the pandemic, the interest rates dropped, and now again it's rising, right? So
That's
a lot of people are like, "What's happening?" Right? They've not been told that something like this happens. So they're like feeling like, my lender did not tell me that the interest rates are going to increase, and now I'm feeling the pinch of EMIs. Right? So how would you look at?
So typically, when we are approaching the customer, obviously, as you will know, there is something called as a fixed obligation income ratio that all of us calculate.
Yeah.
And that decides the EMI of the customer.
What you mean by that is, depending on their income, there is a certain amount of EMI that person can bear.
Right.
That's
right.
basically EMI divided by their income. That's the income ratio.
That's right. So you will typically find out the fixed obligation to income ratio that the customer will have, and then suggest the installment to the customer.
Yeah.
I think when we do this, we educate the customer that there are going to be cycles.
Yeah.
And in these cycles, there is always going to be a chance where the EMIs are going to go higher.
Yeah.
Right. So plan for the EMIs so that you are comfortable. Obviously, at some points of time, when there's typically a salaried customer, there's also a step up that we do. So depending upon the income, as the income goes up, the EMIs also can step up. That also facilities kind of available
to finish the loan faster.
That's also there. Also to grow along with the salary of the customer. So today, let's say the salary is 1 lakh rupees monthly, and tomorrow it is going to rise to, let's say, 1,10,000 rupees or 20,000 rupees. The EMI that you can repay when you have a higher disposable income is going to be higher. So when we structure the deal, we make sure that there's a step up which is also brought in. That's one way of doing it. But coming back to your question which you asked, we guide the customer that there are going to be cycles. So when he chooses the EMI, some margins should be kept.
Yeah.
And the interesting one is that you could also hedge. You can actually hedge. So typically a customer can hedge by putting it in a short-term debt fund, or put a debt put money in debt fund and make sure that that money helps the customer on both the sides. So there's the surplus, you can invest in the debt fund, and you can also invest in debt fund and use that money whenever the interest rates are going to go up. So we also advise customers to hedge suitably, but most importantly, I think we advise the customer not to go very thin and leave some margin,
right.
which
What
really
is
helps.
a good margin, income ratio margin that you recommend?
I think anywhere between 60 to 70% of the overall income is what we will recommend as an obligation, and 30 rupees should be kept by the customer.
Okay.
For any needs which may come up due to any exigencies. But there are customers, and it actually depends upon the incomes also. So when somebody is earning a domestic income is more than 7 lakhs, 8 lakhs, then those percentages can even be, it could be 80% also that somebody could take an EMI upon, because 20% itself as absolute is good enough for the customer to kind of manage.
So Pankaj, what do you think about the real estate industry in India, right? Because over the last couple of decades, the real estate prices have boomed, right? I mean, my parents were able to buy homes easily back then. And now when I talk to, my friends, my millennial and Gen Z friends, everybody's really worried, how can I afford a 2-3 crore house? And also we hear that government is going to come up with a lot of, affordable housing options. So what do you think those could be, and how do you think the young India can, someday afford the houses? I mean, for example, we are in Mumbai right now, 2-3 crore houses like the normal average here.
So I think interesting one. See, real estate industry in India, I personally feel, and data also substantiates that there is huge headroom for growth. If I compare India's mortgage finance market to overall GDP versus any of the developing countries and also developed countries, there is almost a 4 to 5x of difference which is there when I compare those percentages.
Okay.
So huge headroom for growth.
Okay.
Obviously, the entire housing or real estate industry is pivoted around financing. And if you look at how the housing finance sector has moved, broadly the CAGR of growth for that sector also is between 14 to 15%, which is higher than the GDP, which is there.
You're talking about normal real estate or even like residential properties?
I'm talking about residential properties.
Okay.
Yes. And three trends are clearly emerging. One, because of nuclear families. One, urbanization, right? And third is, more and more commercial hubs getting created, educational hubs getting, created. And this entire, I would say, impetus by the government also on building infra is also driving, population moving to tier 3, tier 2, tier 1 cities, from the hinterlands. I think that is fueling, the real estate market, and that is also leading to the property price increases that you kind of mentioned. And I think the increases, we track this closely, increases are happening more in the tier 2, tier 3 markets versus tier 1 markets.
Yeah. Tier 1 would be sort of
about 10%.
It's about
10%.
Right?
Yes, and within that also pockets are there where you will have pockets of excellence in every city. So that is what is kind of driving that. So with this background, I think government, as you will agree that this is such a big vote bank. The entire real estate industry, the contribution to GDP, the people anywhere, the amount of people which get employed because of the housing sector are also enormous. So I think it keeps on working on providing such schemes which is going to bring on and bring or improve affordability to an extent. Prime Minister Awas Yojana, PMAY, which was launched a few years back, and that really fueled 1.2 crore people in India who actually bought affordable housing. They got to, and I think that's the anticipation you had in the interim budget. The Honorable Finance Minister announcing that a scheme is again underway for PMAY. There are also talks about the government providing access to funds to housing finance companies at also more economical rates, so which can also get translated to the end customers. So those are the schemes that are anticipated.
So the government is incentivizing companies like you, to give affordable interest rates to.
That's right. That's right. Because government strongly feels that housing finance companies like us are actually catering to the affordable housing requirement of India.
Yeah.
And for us, we require cheaper sources of capital. We require capital which is high volume, which is low cost and low volatility. That's what typically we want capital at. And if we are going to get funds from government, which is again high volume, low cost and low volatility, then obviously we'll be able to lend to the end customers and pass on the benefits to the end customers.
Got it.
So that is what we are anticipating. The interim budget has announcements, so we are looking forward to something coming up. For a housing finance company, we need liabilities that are really low cost, high in volume, and which are not as volatile.
Which the government can give you.
The government can provide that access, to finance, access to liability to us, and that can get translated to the end customers.
So basically, you're saying when the government gives you access to affordable capital, you can pass on those benefits to the middle class population of the country.
And to be fair, government already passes these funds to us through NHB. So this is going to be another funnel from where the funds can actually come in. We are looking forward to that. So no announcements have been made, but we are anticipating the same.
Wow, the future looks really, really exciting, and I'm looking forward to see what's coming. Thank you so much, Pankaj. It's been an absolute pleasure listening to you talk about the future of finance.
Thanks, Sharan. It's been a pleasure as well.